What's up, everybody? Bueller here again, and I had a bunch of requests for. I have a huge list, guys. I kept your list of Caterpillar, Microsoft, MU, BA, NVDA, AMD. There's a ton of tickers you guys gave me, and I have them on a list, so I will be getting through them. Just gonna do them one at a time. But today we're gonna be doing NVIDIA on the bigger and smaller time frames. I am so good at English. So let's start on the monthly time frame. We do the monthly time frame levels to help us out on the daily time frame, which the daily is what we use to get our TA, a lot of our breakdowns, a lot of what we're just looking for. So let's just go ahead and start down here. Emerging candle, emerging candle, emerging candle, emerging candle, another emerging candle, another emerging candle, another emerging candle, and one more. And then we're going to add a couple halfway points. You guys know as well as I do, whenever we have a large range, it's very smart to make sure you have a halfway point. A halfway point, again, is just using a fib and then adding exactly what I'm saying, the 50%, the halfway point. This is to add a in-between large area range. Like whenever you see a large range, it's not really fair to say, guys, above 162, aim for 200. No, you're definitely going to have that in-between area, so you need to add that. Add that in-between level here. Looks like we have a few we could add here. And you'll see me possibly do this on the daily time frame as well whenever I get over to the smaller time frame charting side of things. But this is essentially what we like to chart to get all of our bigger time frame levels. I could definitely add a bunch more in here. Could even add one right here if we wanted to. Just for practice too, it's just good for that as well. And thank you guys again for the amount of support on the SPY video, the Apple video, the Tesla video. Hopefully I get a good amount of support on this video as well. It seems like a lot of you guys really do enjoy some of these breakdowns. And there we go, we have NVIDIA. And you can see we could probably add a halfway point down here. We could definitely continue doing levels to the downside. But this is really useful to look at TA on the bigger time frames. I like to use zones sometimes. You know, if I see a reversal, I'll go from the top to the open of the last green candle, and that gives me an area to look past for the future. But this is essentially an area of supply, and vice versa. You know, like I won't steal from there. But let's say we have like a good reversal point. Price continues up from here, rejects, price continues up from here. I like to go from the low of that move to the top of that last red candle, which in that case, this would have been a good area of demand to look for potential bullish patterns. We got a morning star, we got a hold of support. We got a pretty good soldier candle pop up here and a good gap up with rising volume. That was a potentially very good candle to buy in on, even without using the EMAs. That was a very good find. And even if you don't like that, you know, just looking past new highs, there was a good rising volume push past it, a good hold, a good retest, a good continuation, and even good patterns from down here as well. But I love looking at the bigger time frames to help me find those patterns, whether it's to the downside, to the upside, it really doesn't matter. And right now you guys can actually see from the previous breakout of this area here to the current high, let's just say it was to slow down here. Let's just say this was the high of the move. They can't get past 224 for some reason. Then I'm going to essentially look at this area for a potential slowdown. So I'll be looking to see, can they come back down? Can they hold this? And as long as they do, whoops, I just recreated that. If they do, then we'll be looking for calls. If they can't hold it, we'll be looking for good short term. But essentially, that's what I'm looking for. But let's go down to the smaller time frame. And of course, if you guys want to add EMAs, you can add the 9, the 21, and the 55. These are very good for swing trading, in my opinion. You look from one to the next, above the 9 to the 21, above the 9 and the 21 to the 55, so on and so on. And that helps you out a lot. Let's back out to the daily over here. You can see we're starting over here, so let's start back here. I like to get a few levels below and a few levels above. Therefore, we don't have to worry about charting it. Like, let's say one day it has like a 10% day. We don't have to worry about adding new levels or anything on the bigger time frames because they're already set and ready to go. You can see we have a large range right here, already finding a good use of that halfway point. Because again, on the smaller time frame, would it really be fair to say above 190.50, aim for 200? No, there's definitely going to be a level in between. I think we all psychologically know 195 is a good level in between. But just in case, let's add that halfway point, because why not, right? And since we don't have any green candles above that, we're just going to skip that, and we're going to have to add a halfway point here. I'm going to have to add 2 in between here, it looks like. Delete that. And you can see I know I'm a little off on the level, but it's okay. And you guys see I never kind of skip away from any of my rules. No matter what ticker we use, no matter how much distance is between an emerging candle, you know, it doesn't matter. We're always going to be able to find more levels around there. Price history is king. It's actually slightly above. We're going to add that. Keep going to the right. And you can see we're getting on a huge rally here now. Let's move the chart back up more. Emerging candle, and we're a little bit above current price. Let's go ahead and stop now, and let's add a couple halfway points above here just to make sure we get everything for the future. We could probably add one here, probably about like 235 somewhere, 236, and there's probably another one right here at about 244. Go back down to the 5-day, 5-minute, And this is where you get all of your smaller time frame levels. Of course, maybe go down to the 1 day, 5 minutes. It's a little easier to look at. But you can see, like before today started, what would we have added on? We would have highlighted the previous day high, the level here, and the previous day high. We would have highlighted that. You have the previous day low in the open, kind of in the same vicinity, and that was kind of the initial range for the day. You have pre-market high right here. You have this 216 level right here, which would have been a very good break above or a good break below 212, which really this wasn't even that strong of a break below because your pre-market's just right there, and this would you would have had to worry about your previous day close, which is right here. So that would have been a good break below, is below 210.84 and for 208.60, and that would have been a good trade. Looks like, though, for the most part of the day, we just had a good period of consolidation. And, of course, not a whole lot of this TA matters because a lot of it comes from the PAL price action today. There's also another speaker in the consumer sentiment that came out, or consumer credit, and it kind of messed the price action. But in terms of coming up with the trade plan, though, it doesn't matter what's in front of you. You know, if price started up here, or down here, it would not have mattered. You could have definitely still got a good trade plan on that. So let's do the same thing, but going into tomorrow. So what would I add on NVIDIA going into tomorrow? Well, just like I did on that day, we're going to add the true high of yesterday. Well, today, but going into tomorrow, it will be yesterday. So we got the high, the close, which is kind of the same vicinity. And anytime I see that stuff, and people always ask, is that a zone? Essentially, yes, but that's not what I call it. I just call it like a combination of levels. I know there's a lot of levels here, so price is going to definitely react to that area. We're also going to want to add the true low and the true open, which is down here. So those aren't as useful because, of course, price is up here. But going into tomorrow, we'll see whether we either head towards 226.30s and see if we can get past that, or if we're going to reject it, come back down, get a little bit of a hold, and then a continuation higher, or is that going to fail and break down lower? It doesn't matter. But again, if price starts here, there's a plan. If price starts here, there's a plan. If price starts here, there's a plan. And that's the entire focus of this system, is you're able to kind of go through this ticker with very strong levels of not just old price history, like these levels, like where were all these levels from? Let's go look. All these levels are from like mid of 2021 to October of 2021, right? And then you're also combining them with short-term price history levels from literally the same week. So yesterday you'd be using these levels, but essentially these can help us. These can essentially help us get really good trade plans regardless of where price starts or how SPY is reacting. Of course, when you're looking at NVIDIA, you want to pay attention to a few tickers. You want to pay attention to AMD because sometimes you can find leading or lagging moves. You want to pay attention to SMH, SOXX, or SOXS. Any one of these will be very good for a secondary confirmation when looking at NVIDIA. And AMD, you don't have to check every time you trade NVIDIA or vice versa, but it is good to at least see, is AMD leading, is it lagging, and then see, you know, is that helping you add into a potential confirmation for your trade or whatever opportunity pops up. But overall, as you guys can see, though, you can definitely use double confirmation. You can definitely use short-term price history with a combination of your longer-term price history, and this gives you very, very, very strong trade plans just by adding these simple levels. And at any time, you know, going into the next day, I get this question a lot. Let's say tomorrow ends, right? And just like you saw me delete these levels, you know, all it takes is you going back through and deleting a couple of these smaller time frame levels, and then waiting for the next day to finish out, or after it's already finished out, delete these levels and add them onto the next day, just like you saw me do here. And that's just going to help you not just grow a good routine of your levels and kind of maintaining your chart, but also just really good practice, really good discipline to kind of go back through and just review what happened that day. You know, just tell the story of the chart. You know, if you're telling the story of what happened today, of course it doesn't matter because a lot of this is very volatile price action. You know, you had a really good tight range for the first hour and a half, almost hour and 25 minutes, hour and a half later, you know, it finally breaks out to the upside, and it only just barely taps that, right? But if you go from, and this is me just doing me, we do this in every stream, if you go from point of the breakout to where they pushed and kind of slowed down, you can actually see right here in the price action, they actually held the halfway point. I know my cursor is going all out of whack because I'm using the OHLC setting. Let me turn that off so it doesn't do that. Rectangle, highlighting the halfway point, that orange level down to the golden pocket, the GP, the golden area there. And you can see price actually held that perfectly and then continued higher. So that actually would have been a very solid trade, getting in early or even getting in outside of that initial range. And that would have been a good 40% entry. This would have been a better 80% entry. You could see price kind of had weak volume, ended up holding that area, and then you had rising volume exit. So right here would have been a very passive 80% entry, and you could have started taking profits on the next dollar up. You can see shortly after that, if I extend this little area over, I'll try my best not to move it down lower. You can see price came back down to this area again and exited with rising volume. They pushed through the 1950 level, hit past 220s, and almost hit 222s. That's pretty crazy. Came back down, broke that area. You would have definitely had some fake outs there. And look where they recovered again, right in this general vicinity again. So it's just crazy to see, you know, even after just using it for short-term bounces and short-term moves, you can see how it later became a good find, and you can see how later after a crazy sell-off, how you could have gotten back into a recovery move. I promise you, if I turn the 9 EMA on right now, that there's a breakout right here, the continuation here, it fails it, and then it picks back up with this candle pushing back over the 9 EMA. And I promise you, on this fall through this area again, I promise you, this is most likely the candle that's pushing above the 9 EMA, and it's outside of our area here. But let's turn it on real quick and see. And yep, look, the breakout that happened here, the hold, the continuation, they had that fake out, but it ended up coming back down to that zone again. This is also a good push up above it. And look, right where I said, I almost promise you this is the candle that pushes above that area as well as the 9 EMA, because this is just where price kind of hit that low, lets the 9 EMA catch up as price is slowing down, and then as price is pushing in this 3-bar play, it's actually helping the 9 EMA curl back up as it pushes over it, and then they take over the level, and the 9 EMA helping them get double confirmation or multiple signals popping up at you saying, hey, look, this wants to try and continue higher. So even though this price action was volatile, it does still give you a really good example of what to expect and what you can go from. And again, guys, just to show you again, because I get a lot of questions on this, the only reason I use my fibs is, one, to get those halfway points that I can't normally get, you know, to help me out on the bigger time frame, to fill in those bigger spaces, but also anytime I see an open range breakout. So let's say price would have exited here, came all the way down to this level, right? Price just perfectly touches this level and then bounces. I want to see from that bounce, where do they go and reject? Because if they can reject this and move further down, then I know, okay, I can probably find a good hammer here. Or if price pushes back over it, I know, oh, okay, they don't want to get a short-term reversal. They want a more long-term reversal. So they're going to go back to the level in which they fell from and get a retest from there, right? So it's really good to kind of tell you whether it's a retest or a reversal. That's really what we're looking for when I look for those fibs. But hopefully you enjoyed the video. Drop a like on the video. Please drop a comment. Let me know what other tickers you want to see me do. And I'll see you guys in the next one.